Hey yo, it's your boy Captain Blue. We are back with another video. Make sure you click that subscribe button if you're interested in what the boy is cooking. Let's get it. So today I'm going to show you how we caught this beautiful sell on Nasdaq using smart money concept, right? So I'm going to take you through top-down analysis from 4 hours until we took an entry here on the 15-minute time frame, right? So you all know that I find my daily bias on a 4 hours time frame, and then I scale down to 15 minutes time frame to get my entry, you understand, after spotting my daily bias, right? So let's remove everything and then we jump straight to 4 hours time frame, right? So when we get to 4 hours time frame, this is Nasdaq, right? I know a lot of you got confused on what's happening here with Nasdaq, but it's straightforward. This thing, it's very simple. You understand? How did we catch these cells? It's a very straightforward setup, you understand? So with Nasdaq, as you can see here, it gave us what? An overall high, right, on the 4 hours time frame. It gave us an overall low here on the 4 hours time frame, right? And then from there it gave us a high, it went down, right? After pushing to the downside, then it gave us a low, then a pullback, right? And then from here we can see that previously Nasdaq was breaking structures to the upside, right? It was in an uptrend. As you can see, it was pushing to the upside, but from here we see Nasdaq taking out a low and then pushing to the downside, changing direction, you understand? So here we have what? A change of character, because of this is the first low the market took when it started pushing to the upside, you understand? This is the first low the market took out when it started pushing to the downside. So this is our change of character on the 4 hours time frame, right? So after spotting our change of character, we can see that we also have a supply here, right? This is a supply zone. The last bullish candlestick before the push to the downside, right? The last bullish candlestick before the push to the downside, right? So but we can see that the market didn't mitigate our supply zone. What caused the market not to mitigate our supply zone? You understand? What was the reason behind the market not reaching our overall supply zone? It's because of what? A fair value gap. We can see the market pushed down with this bearish engulfing candlestick, followed by another bearish engulfing candlestick, then left an imbalance here, which gave us what? Which gave us a fair value gap, which is our key level, you understand, on the 4 hours time frame. And then we saw the market mitigating, the market left us this fair value gap, went down. What are we expecting? We're expecting the market to come back up, mitigate the fair value gap, then we continue pushing to the downside, right? So we can also see that the market mitigated 50% of that fair value gap, meaning half of that fair value gap was filled, you understand? Half of the fair value gap was filled, meaning we are looking for selling opportunities as long as the market fails to break above the fair value gap, you understand? So here we saw the market failing to just break above the fair value gap, you understand? And then that's where we saw that, okay, the market is struggling to just break the fair value gap. So meaning we are looking for what? We are looking for selling opportunities. Then that's where we are done finding out our daily bias, you understand? Meaning we are looking for selling opportunities from the fair value gap. Below the fair value gap, we are going to be looking for sales, targeting whatever zone that we are going to target when we get to a 15-minute time frame. Because of, you know me, I'm a day trader. I don't swing. I take trades. At the end of the day, I need to hit TP or get stopped out at break even, you understand? So on today's setup, after marking your daily bias. You understand? After spotting your daily bias that okay, the market gave you a change of character, a fair value gap, went down, came back, mitigated the fair value gap, failed to break above the fair value gap, then that's what gives us confirmation that okay, we are looking for selling opportunities on a bigger time frame, right? So we remove everything, right? We remove everything, then we go straight to a 15-minute time frame, right? So when we get to a 15-minute time frame, this is what we see, right? This is a 15-minute time frame. We need to separate yesterday from today, you understand? Because of what? We are looking for a trade that we can take today, since it's Tuesday, right? We take our vertical line, we put it straight at 12 o'clock, because of that's where the market actually opened, right? And then yesterday, where did we last get a break of structure? Exactly here, right? This is where the market took out a high, right? So we are more interested in this area as our TP if we are looking for selling opportunities, because of that's where the market took out a high. So this, remember, this is not a confirmed break of structure, you understand? That was just a liquidity sweep, you understand? So this is yesterday's previous low, you understand? This is yesterday's previous low here, and then this is today's previous high, right? This was our previous high on today, where it was created during London session, right? And then from there, from yesterday, ever since the market took out this high, it continued breaking structures to the upside, meaning creating highs and breaking them, creating highs and breaking them. And then from here, before the market closed, it gave us a high. When it opened today, since it opened exactly here, it opened, it went down a little bit, then it took out what? Yesterday's high, right? From there we can see that okay, the market is still what? It's still bullish, because of its creating highs and breaking them. But we don't just take, remember, even if the market, we can see that the market is still bullish, remember, on a 4 hours time frame we are looking for selling opportunities, you understand? And then from there we got what? A break of structure here, right? That's a break of structure, right? We'll put it like that. Oh, it's not a valid break of structure, by the way, it was just a liquidity sweep. So remember, those things are not valid break of structures, you understand? We didn't see the market, or we don't have a candlestick that's closing above these highs that were taken out here, you understand? Meaning those things are not valid, you understand? We cannot say the market is a buy, because of we see it creating highs and breaking them, creating highs and breaking them, just like that, you understand? So a valid break of structure to the upside, it has to be a full body candlestick closing above, you understand? So now here we remove our overall high. We can see also here, this was our last liquidity sweep, you understand? There the market swept liquidity, it took out London sessions highs, then it closed below the area, you understand? So from there we started looking for selling opportunities. Why did we start looking for selling opportunities? The market failed to break structures to the upside, then we started marking our supply and demand. So we have a demand zone here, you understand? What is a demand zone? A demand zone is the last bearish candlestick before a push to the upside, right? So we mark it as a demand zone on the 15 minutes time frame, right? After spotting our demand zone, right, we have liquidity. Where is liquidity resting? We have a lot of liquidity resting here. Why do we say we have a lot of liquidity resting there? Because of yesterday a lot of entries were taken from that level, because of this was a fair value gap, you understand? And then the market came down, mitigated the gap, and then a lot of buys were taken from this area, which creates this area an area of liquidity, right? So let us move. So we mark our liquidity, meaning this is our TP1 or this is our POI, because of that's where we have a lot of liquidity resting for today, you understand? we mark it as liquidity. You understand? Before we can target the demand zone, we need to see the market sweeping the sell side liquidity before we can go for the demand zone, because of here it was creating buy side liquidity and sweeping buy side liquidity while leaving sell side liquidity behind, right? And then from there it left us sell side liquidity. It continued pushing to the upside, and then from here, instead of breaking highs, it took out a low, right? It took out this low, and then when we check, you understand, it took out this low here, right, showing us that the market is no longer interested in breaking highs. You understand? Showing us that the market is no longer interested in breaking highs, creating highs and breaking them. You understand? So it swept sell side liquidity here. You understand? And then also above here we got what? A change of character. You understand? We got a change of character there because of that's the first low the market took out. So if you can check clearly, you will see that this candlestick closed below the zone. You understand? That's where we got a change of character, indicating to us that we might be selling anytime soon. You understand? So the market continued pushing to the downside, swept sell side liquidity, and also left us another sell side liquidity here. So while it was going for the sell side liquidity, right, while it was going for the sell side liquidity, it left us what? Buy side liquidity resting here. It left us buy side liquidity resting here. You understand? So it pushed back up, swept this buy side liquidity that was created during London session. You understand? And then from there it started pushing to the downside. Then it left us what? A supply zone. What is a supply zone? A supply zone, it's the last bullish candlestick before the push to the upside, before the push to the downside, right? So it left us a supply zone there. You understand? Then it went down, swept the sell side liquidity that was resting here, right? After sweeping the sell side liquidity that was resting here, it went down, retested the supply, mitigated 50% of that supply zone, right? After mitigating 50% of that supply zone, then as soon as the market closed below the zone, that's where we took our entry, exactly there. That's where we took our entry, exactly there. Stop loss above the supply, and then our take profit was 50% of the demand zone. So just like that, that's how we chopped Nasdaq today, which is Tuesday, the 5th of August. That's how Nasdaq was chopped. You understand? So if you are interested in what the boy is cooking, make sure you like, comment, share the video, and don't forget to subscribe to get more videos like this. So let's see each other on the next video. Take care.